welcome to the Business Standard Morning Show. I'm Nazia Iqbal. Let's take a look at the stories for the day. As India's economy bounces back from the pandemic, a severe power crisis threatens to derail the recovery even as the festive season approaches. Power plants that burn coal are running out of stocks at a time when India's industrial power demand has surged. What is causing this coal shortage, and does this mean massive power cuts might be in the offing? Let us take a look.
India is facing the prospect of large-scale power cuts as the country's power plants are running dangerously low on coal, the fuel which accounts for 70% of the country's electricity output. According to the Central Electricity Authority data, 67% of 135 thermal plants tracked had just 4 days of coal supplies or less. At the start of August, these plants had 13 days of supplies on average. What is worse is that 16 of these plants have completely run out of supplies, and 75 have just 3 days supplies or less. The demand for electricity is rising with economic activity resuming in the country. The power demand in August 2021 was 17% higher than the pre-COVID-19 level of August 2019, according to the government. Several factors have contributed to the present coal shortage. Let us take a look at them. Facing record global coal prices on the back of a strong demand and an increase in freight costs, Indian buyers have avoided importing the fossil fuel in recent months. Instead, they have relied mostly on domestic stock. That has reduced the domestic stock to the lowest level in more than 3 years, with state-owned Coal India failing to keep up with the surge in local demand. Coal India, which produces more than 80% of the country's coal, bumped up production towards the end of August, but was facing bottlenecks in transporting the coal to power plants. The company has kept prices unchanged over the past year. The shares of most companies in power and coal mining business have seen a positive impact of this demand surge. The scrip of Coal India and other power producers like NTPC, Tata Power and Torrent Power have risen between 5% and 30% in recent weeks. Coal India produced 42.6 million tons of coal in August, an increase of almost 15% from the same month a year ago. Its production in September was roughly the same as last year at 40.7 million tons. Excessive rains in coal mining areas of Jharkhand, Chhattisgarh and Odisha in August and September aggravated the problem, leading to lower dispatches during the period. The price of coal from Indonesia, one of India's major suppliers, has surged more than 200% since March. India mainly imports coal from Indonesia, Australia and South Africa, besides Colombia, Russia, Kazakhstan and Mozambique. Coal India had warned the Power Ministry of a potential crisis as early as February 2021. The company told power generators to increase their coal stocks before the monsoon. Despite its request, utilities were using existing stockpiles and limited fresh purchases amid a rising power output. A majority of the power plants also did not adhere to guidelines of maintaining a 22-day coal stock. This may have been a mistake on part of the power generating companies. Electricity generated from coal rose 20% in the first 8 months of this year. However, government officials have now pointed out that the drop in coal supply is not leading to any energy crisis. According to data available with grid regulator Power System Operation Corporation, there is currently no energy shortage in the country. A senior coal ministry official told Business Standard that the demand-supply mismatch would in no way impact consumers like in other countries. But Power Minister R.K. Singh told a national daily that the coal crisis could last for as long as 6 months. He added that power demand usually started coming down in the second half of October, but the situation right now was uncertain. In China, for example, several provinces have begun power rationing in order to conserve the fuel ahead of the peak winter demand season. That country's power shortage has reached such an extent that homes in some parts are experiencing unannounced power cuts. According to an estimate by Goldman Sachs, up to 44% of China's industrial activity has been impacted by power shortages. China's order to its state energy companies to secure coal supplies to avoid any winter shortage is driving up prices for other major importers like India. At the same time, some local authorities are also curbing power use by industry to meet energy consumption and efficiency targets set by China's central government. China has promised to cut energy intensity by around 3% in 2021 to meet its climate goals. Even though India is on an aggressive path to increase the proportion of renewables in its energy mix, coal still remains the backbone of the power sector. India's dependence on coal also contributes heavily to its trade deficit. To address the current crisis and help in import substitution, the government has allowed companies with captive mines to sell 50% of their annual output in the open market. Additionally, to avoid a demand-supply mismatch, the Power and Coal Ministries have jointly decided to drop a monthly coal supply program for thermal power units. The goal is to build a 40 million ton stockpile at power plants by March, which marks the beginning of the high power demand period. The current stock stands at 7.6 million tons. Any power cuts to the industry will damage India's rebound as the economy is recovering from a historic 7.3% contraction in FY21. In fact, Jindal Steel and Power has warned that steel prices are expected to increase in the coming months as companies are buying coal at 3 times the rates just a month ago. While blackouts like those in China seem unlikely in the immediate future, India's power producers will need to increase domestic coal purchases as well as imports regardless of the price.
Even as businesses were recovering after the first COVID wave last year, the second one struck India earlier this year and hit all businesses, including ride-sharing platforms, as well as the broader economy. Now that the coronavirus situation is getting better and the economy is on a recovery path, how is the ride-sharing business faring? In an exclusive interview with Business Standard's Surajit Das Gupta, Uber President for India and South Asia, Prabhjeet Singh, seemed upbeat about the business recovery. He said he was bullish on segments like auto rickshaw and also spoke about his company's India R&D work and the implementation of social security benefits for gig workers.
Hi, Prabhjeet.
Hi, so how have you been?
Yeah, wonderful to see you. Basically, after the second wave, things started looking good last year, but again, the second wave came and obviously the car sharing business got impacted like everything else. So just wanted to get an idea of how much of the pullback has happened, what direction is it taking? So is the worst over and now everything is sort of moving in place?
Absolutely. So as cities begin moving, so does Uber. And as the Indian cities have opened up post the second wave, as the pace of vaccination has picked up, we have also seen a significant recovery and acceleration on ride sharing. So for example, we are seeing in multiple categories now business come back to levels which were pre-COVID. So for example, categories which are our fast growing categories like auto, moto, rentals products are already seeing near pre-COVID levels of trips with riders. We're also seeing growth in some of the emerging market categories like intercity, where people are now beginning to use the same Uber service to take trips across cities. And we have also seen very encouraging feedback on some of our new services. For example, Connect, which has now grown 3x since beginning of the year, which is our package delivery service between point A and point B. Or also recently, as offices open up and employees start coming back, we have launched a corporate shuttle service to be able to help companies move their employees from home and back safely and efficiently. So overall, very, very encouraged to see the recovery levels. In terms of cities, we are beginning to expand our footprint across the country. We are in upwards of 90 cities already, and very soon in the next couple of weeks, we hope to hit a 100 city milestone also.
And by December end, what is the kind of number you're looking at?
Definitely will be much more than 100 overall, Suro. And given this is also the season where we expect, given festivals, given offices opening up, schools opening up, and even faster acceleration, particularly in our core four wheels cars business, I expect that the overall recovery levels will be very, very encouraging by end of the year. So we are all hands on deck to be able to support the increased demand on the platform across the board right now.
The auto business for you has done very well. So if you could briefly tell me where you are.
So we are very bullish on taking the magic of the Uber technology platform to a category like auto, which has been around for years in a market like India. The product market fit is spectacular. It's a low-cost solution which riders love. It overcomes the challenge of hail, and you don't need to haggle. The vehicle comes to your doorstep, and you have the benefit of digital payments and the safety measures which the Uber platform brings in. And third, for the drivers, it adds up becoming an incremental source of earnings. Your utilizations typically will go up anywhere from 15 to 20%, which means more money in the driver pocket. I think this is a win-win for both drivers, riders, and Uber. What we're also super encouraged is that the work which we're doing on autos in India is actually being relevant in multiple other geographies globally. So many emerging markets, for example, in Africa or Middle East, are looking to replicate the learnings from product like auto.
You have strengthening your R&D in this country, and it is no longer something which is for only India, but a lot of it is happening which is for the global market.
So India is not just an important market for mobility, but also a great hub for talent for us. We are building in India for the world. Today, we have tech centers in Bangalore and Hyderabad, which are 750 plus strong already. We just finished our 7th year anniversary of tech center, starting off as a 3-member team in 2014. We are now 750 plus, and by the end of the year, we expect to hit 1,000 number. These are teams which are not just building for India, but building for the world, and not just for the mobility business, but also for our delivery business globally, and are also working on scaled solutions which are strengthening the core backbone of the Uber technology. Just to give you an example, our engineering team based out of Hyderabad has helped create new solutions which have been taken to be launched in Japan and US on the delivery side. We have also helped build services out of India on maps updates across 150 cities globally.
Will you support many of these startups which are working in this space in terms of minority stakes? Are you open to that call?
So I think as we speak with multiple founders and entrepreneurs in the ecosystem, and we also scale players, we hear that they need 3 things. One is many of them are actually looking for technical expertise and mentorship, which is often hard to come by because mobility ecosystem is still very, very new. Second is many of them are looking for opportunity to experiment very quickly. Often otherwise you have to spend millions of dollars to be able to build certain scale before you get consumer feedback in multiple side marketplaces. Uber can provide that. And third is obviously many of them will be looking for support on funding. We are very committed to find ways to support on all the 3 fronts in different forms.
You were one of the first companies, and even your global CEO had basically congratulated India for having a very clear gig worker policy, which we were struggling to get in other parts of the world where there has been a lot of debate and a lot of problems which has happened. How has that implementation, where are you in that whole scheme of things?
So we are very pleased that and want to congratulate the government of India to come out with a visionary code on social security policy. In fact, that makes India one of the first countries in the world to establish formal framework for benefits and protections for gig and platform workers. We see our contribution to these social security schemes as a #1 priority, and something, by the way, that will move the entire sector forward. I believe this is a win for drivers. It's a win for platform like Uber, and also enables the government to create a structured framework. We are looking forward to the scheme being formally implemented and are already in active dialogue with multiple stakeholders in the government, including sharing our expertise and knowledge on how the systems can be set up.
Thank you very much for your time.
Thank you. Great speaking with you always. Okay.
Governor Shaktikanta Das will announce the outcome of the RBI's 3-day monetary policy meet at 10 a.m. today. There are expectations that the central bank will keep key interest rates unchanged. However, volatility could be on the cards for D Street, as the RBI's views on policy normalization, GDP growth, inflation trajectory, and GSAP quantum will lay the roadmap for days ahead. That apart, IT major TCS will kickstart the Q2 earnings season later in the day. What could the company's numbers look like? And what are the other key drivers for the markets today? Let's find out.
Domestic markets will remain volatile in the first half of today's session. as investors will read the fine print of the Reserve Bank of India's policy decision. RBI Governor Shaktikanta Das will announce the policy outcome at 10 a.m. today and then address a press conference later in the day. While the central bank is expected to keep key interest rates steady in order to support growth, its views on policy normalization, GDP growth, inflation trajectory, and GSAP quantum will be important. Given this, rate-sensitive stocks like banks, automobile, and real estate ones, along with movement in bond yields, will be on investors' radar today. Thereafter, focus will shift to IT stocks as sector major Tata Consultancy Services will kickstart the September quarter earnings season. Most brokerages are penciling in double-digit growth in net profit and revenue, led by improvement in demand from BFSI, healthcare and retail, acceleration in digital technologies, and ramp-up of deals along with recovery from the India market. Furthermore, persistent market share loss of key players such as Capgemini and Cognizant is also expected to directly benefit TCS. While net profit growth is expected to grow anywhere between 22 and 32%, up to 9,927 crore rupees, the revenue could rise up to 20% over previous year to 48,191 crore rupees. As regards key monitorables, the management's view on margin outlook, demand and pricing trends, along with deal win commentary will be keenly tracked by the markets. Stock-specific developments, foreign fund flow and oil prices will be the other factors guiding the markets today. On the global front, investors will track China's services PMI data for September and US weekly jobs data, both slated to be released later today. Yesterday, equity markets rebounded amid a recovery in global markets. The BSE Sensex settled 488 points higher at 59,678 levels, while the Nifty 50 ended at the 17,790 mark, which is up 144 points. Both the indices were up 0.8% each over their previous close. The recovery in the broader markets was even sharper, with the BSE mid-cap and small-cap indices settling 1.7% and 1.4% higher respectively.
India wants data related to Indian users stored and processed within India's borders. Under its data localization plan, which first made headlines in early 2018, it will be mandatory for companies collecting critical consumer data to store and process them in data centers present within the country's borders. So what is a data center and why is it important with respect to India's data localization plan? Here's an explainer.
It is often said that data is the new gold. The functioning of the digital economy is dependent on data, and data is organized, stored, managed, and processed in specialized facilities called data centers. So what is data center, and why is it important with respect to India's data localization plan? Let's find out. A data center is a specialized physical facility of network computers, storages, and other information technology equipment that businesses, organizations, and other entities in the online space use to organize, process, store, and disseminate large amounts of data. Such physical facilities are available all across the world and are not restricted by geographical borders. Simply put, this means anyone from anywhere in the world can use data center services by paying a stipulated amount without physically visiting the facility. For instance, any business operating in India can use a data center located in any other country. Now let's understand what data localization means and why India is pitching for it. Data localization simply means restricting the flow of data from one country to another. In India's context, localization will make it mandatory for companies collecting critical consumer data to store and process it in data centers present within India's borders. One of the Indian government's main arguments for data localization concerns the protection of personal and financial information of Indian citizens from foreign surveillance. Another is to enable domestic governments and regulators to seek such data should that be necessary. The idea of data localization first made headlines in India in early 2018 after the Reserve Bank of India mandated companies to locally store and process sensitive data belonging to Indian users of various digital payment services. Until then, most data from India was being stored on a cloud database outside the country. This RBI ruling came after a draft of the Personal Data Protection Bill, prepared by a committee led by former Supreme Court Judge P. N. Srikrishna. A modified bill was later tabled in Parliament on 11th of December 2019 and referred to a joint committee. The approval to the bill remains pending, therefore no fines are currently imposed on companies for non-compliance.
That's all we have for you today. We will be back tomorrow with more news and analysis in our next episode. So stay tuned and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.